Hello, in this presentation we will take a look at the course content and course outline for the QuickBooks versus Excel course. We're currently in the overview section of the Udemy page. If we scroll down through the overview section, we see that we currently have 37.5 hours of video content. That does include introductions, and it could change as we progress through the course. Here we are in the course content section of the course. If we scroll through here, we will have the section headers, which will give us an idea what we will be covering within each section. If we go through and open up each section, we will see that some of the sections will be longer than others. In other words, some section will have more content than others, but the section headers will give us an idea of that content within each section. As we can see scrolling through here, we will have generally a QuickBooks format, and then an Excel file, and then an Excel format. That will be the design as we go through the course. We're going to look first at QuickBooks Online, work through a portion of a comprehensive problem, and then we're going to provide an Excel document and then work through that same portion with the Excel file, that giving us an idea of how to enter this data into the QuickBooks system in a step-by-step system, and then how to see that same thing in more of a transparent format, the format which Excel provides and allows us to see. As we can see here, we have these links to the Excel documents. Those will give us a link to another page where all the Excel documents will be located. That second page will have all the documents, so we don't have to go back there each time, but we will provide that link each time so you can take a look at it and pull down those documents. Those will be formatted in such a way that we can jump forward and go back in time if we so choose. In other words, there will be a separate Excel document for just about every Excel worksheet that we will be going through. And therefore, you don't have to go from start to finish in order to get to those Excel worksheets and complete the problem. You could jump forward, and we'll provide a worksheet that starts at that point in time, and then you can enter the data for that point in time. You can also, of course, go back and re-download a document to have a fresh document and go through it again, going back to a prior portion within the course. Because we are working with QuickBooks Online, we do need to do the QuickBooks portion more in a linear fashion. We don't have the static backups that allow us to go back to the QuickBooks file, so we want to be careful as we go through. If we're following along with the exact information with the course, to go through that, put in the information, we'll have to progress forward through the QuickBooks portion. As we go through the course, the section headers will give us an idea of what will be covered. We have the introduction, which will just introduce what the course will be containing, and that will include this video here. Then we have the start a new company. That's going to include us starting a new QuickBooks file as well as setting up a new Excel worksheet. We're going to say that there has been data before we set up the new file that has not yet been entered into the system, which we're just setting up, a new QuickBooks file, a new Excel file. Therefore, we'll also set up the beginning balances, we'll set up vendors, we'll set up customers, and we'll set up those beginning balances related to the receivables from customers, the payables to vendors, and our banking balance. Once we have QuickBooks all up and running and our worksheet up and running, we're then going to take a look at some accounting concepts. We're not going to go into too much depth about accounting concepts, but we want to have some concept of the accrual principles and how the double entry accounting system works, so that when we go to the next couple sections, we'll have an idea of how we're recording things and why we are recording things. So we'll take a look at the double entry accounting system and how to record transactions. Then we're going to enter data for the first month of operations. This will be one of the longer portions of the course, because this is really what happens for most of the time period in the accounting department. We're entering data. This is where we're going to enter invoices, we're going to enter bills, we're going to enter sales receipts, write checks. Now, to do that, we're also going to have to set up the system in QuickBooks Online to be able to make the data input in something like an invoice as easy as possible, as well as interpret what that invoice is doing to the financial statements. We will interpret that as we set up and record the data into QuickBooks. We'll also interpret it more as we work the Excel portion. The Excel portion giving us the more bare bones, letting us see the links. We'll actually record not just the data input of an invoice, but the journal entry related to the invoice, then record that journal entry to the general ledger, make a trial balance from that, and then finally see what the effect is and create the financial statement from that. As we go through that process, we'll see how everything is related. We can then apply that to the accounting software in order to get a better idea of how to set up the software, what the data input is doing, how to interpret the end result, how to fix problems. This first month we'll also go through some transactions that will be more unique in the first month, or more common, I should say, in the first month. And that's going to be something like financing the business, the owner putting money in the business, taking a loan out for the business. We'll also focus on setting up accounts, because the first month of operations, we don't have memorized accounts yet. And so when we put in that first data input, we don't have anything really to go on. We'll have to set everything up. And the second month then will be easier, because it'll have some of that stuff set up for the normal data input. We'll focus more on cash basis transactions as well in the first month. Then we'll go to the second month of operations, which will be much the same, but now we'll be on the second month, and the things that will change there will be that some of the stuff within the QuickBooks Online system will already have data in it. Therefore, QuickBooks will allow us to auto-populate some things. It'll memorize some of the transactions. We'll already have many of the vendors, many of the customers in place. When we go work for a company, this is actually the setup that we have more often of the time, meaning the QuickBooks file is set up, or whatever the accounting software already set up. And when we enter transactions, the system's going to help us by memorizing the last transaction, and or we can go back and see the last transaction, and the system will already be set up in terms of the accounting system, how it operates. And what we need to do then is figure out how things are working and continue with that. So the normal data input will be much the same there. We won't have some of those beginning journal entries to finance the company, but we will include some journal entries that are going to be things that don't happen all the time, and therefore there's not a normal data entry process, meaning an invoice happens all the time, or a bill or a check happens all the time, and therefore there's data input systems within the program for those. Things that happen more rarely, such as like the purchase of equipment for financing. You finance the purchase of equipment. We don't purchase equipment all the time and finance it. Therefore, there's no data input screen directly related to that transaction. So we'll have to work with that one and see how to put those types of transactions in place. Paying off a loan payment, for example, from an amortization table and splitting up between interest and principal. We'll take a look at some of those type of transactions that are less common or don't happen on a day-to-day basis. We'll also focus more on accrual transactions in the second month of operations. Then we'll go to the bank reconciliations. We're going to reconcile both the first month and second month bank reconciliations and compare and contrast the two. Bank reconciliations are hugely important. Both small businesses and large businesses should be reconciling the books to really have an idea of their financial statements. If you're not reconciling, it's great you're using the software. The books might be have all the information, have a lot of good information, but until we use accounting software to make us have the double entry accounting system and reconcile, meaning we're backing up our system with what has happened in the bank, we don't have full assurance. We have a lot more assurance if we reconcile. So it's pretty important to go through that process. We're going to show how to reconcile the first month, which has some problems unique to the first month, in that we have to put in the beginning balance, and there might be some transactions before we started, meaning we'll have a beginning balance before we start. And then the second month of reconciliation should be easier. Once we've reconciled one time, the system should be easier, and we'll then go forward to the second month of reconciliation and see what happens to the outstanding items before and how do we deal with that in the second month. The Excel portion of the bank reconciliations will give us a more idea of what functionally the bank reconciliation is doing. And that'll give us a better concept of why it's important and what value it's giving, because it really does give a lot of value to the financial process and a lot of verification, a lot of internal control over the process. So that'll be the bank reconciliations, and then we'll finally have the adjusting entries, the financial statement, the closing entries, and the reversing entries, which sounds like a lot, and it is, but this section won't be about the same size, and not probably even shorter than some of the data input, because the adjusting entries are not as many of them. And then we're going to create the financial statement, which in QuickBooks, the financial statement will be generated automatically once we input the data. In Excel, we'll interpret how those financial statements are being created. And then we'll do the closing entries and the reversing entries. Note that the adjusting entries are something that typically are done by a different department or done by an outside CPA firm or with the help of one at the end of the accounting period, and therefore are often conceptually a bit more difficult. They're not just the data input. We have to apply those accrual principles in order to enter the adjusting entries. So we'll go over that process. We're going to have to actually use journal entries in the accounting system oftentimes, although we'll use registers sometimes too, to enter that information. And then when we go to the Excel side, we'll use a worksheet, which is typically used oftentimes to do the adjusting entries, and show how the worksheet can help us to understand conceptually what we're doing there. Then we're going to have the financial statements. They will be generated automatically within QuickBooks. We're going to interpret those financial statements, discuss what are similar and what is not similar in terms of how QuickBooks formats financial statements to what we might think would be normal formatting in terms of just the theory formatting of financial statements. Then we'll take a look at the closing process. Another thing that QuickBooks typically will just do for us based on how we set up the system. Once we set up the system, QuickBooks will automate the closing process, and we then need to just understand what QuickBooks is doing. How is it going to react when we go from period to period, when we run a report from period to period? What's going to happen to the accounts and why? We need to be able to interpret that so we can read the accounts, we can know if there's something wrong with the system. In order to do that better, the Excel format will show us how to do that very well. We'll actually go through the closing process, see what is happening, so that we can apply that to the QuickBooks system as well, in any accounting system. Then we'll talk about reversing entries, which are something that happen after we create the financial statements. So we've done the financial statements. Now we're going to go back and do these reversing entries. It's kind of like if we run in a store and we're cleaning up the cafe, restaurant, or let's say, after the revenue has been generated, we're taking out the trash, we're cleaning the grill for the next time period. In order to do that, we need both the closing entries and the reversing entries. Those are really just basically setting up for the next time period. Reversing entries are conceptually a bit unusual in that they're not really perfectly accrual, as are the adjusting entries. In some ways, they aren't putting us on an accrual basis all the time, but logistically they work well because they separate the normal data input process and the adjusting and reversing process, and they allow us to make the financial statements correct as of the date we create the financial statements, while also allowing us to run the normal accounting system in a normal cyclical process and not interfere with the normal accounting system. So we'll discuss those reversing entries, which adjusting entries need reversing, and how the reversing entries might be done, both QuickBooks Online and Excel.